Well, hello and welcome, and welcome and hello and hello and welcome, guys. TGIF. Thank God it's Friday. Boy, it's been a heck of a week. Looked real good in the beginning of the week, and a lot of disappointment for unrealistic people at the end of the week. Guys, this thing was on an exact roadmap. I told you, but you should know yourself if you've been watching the stock, guys. We're talking SoFi Technologies Inc. Ticker symbol SOFI. My name, of course, is Danny Deals. Once again, still me, haven't changed. For Hurricane Lopez and Stock Karen, we would like to say welcome and hello. Guys, on the day, the SoFi stock was down 14 cents, down two more pennies here after hours. It's July 21st, 2023. It's 4:17 p.m. Guys, I won't bore you with all my bloviating and yelling at the chia pet and, chasing windmills. I just want to tell you what's going to happen. The SHARTmaster is going to break this thing down for you. And it's basically what I told you was going to happen weeks and weeks ago, which is the stock is going to consolidate between 813 and 891. It's going to move up toward $10 and then past $10 before earnings. And then everything from there is going to depend on what the ER says. I don't think it's going to be this brainless attack that it was last ER, which actually was very effective because, like I said, retail investors tend to be emotional and stupid and impulsive and tend to set a lot of ill-advised stop losses, tend to buy a lot of very, very stupid short-term call options late in the week on FOMO after market makers already wrung all the profit out of them and then dumped that hot garbage on their stupid drive-in movie foreheads, five head even in some cases. But guys, the volume today was weak. If you look at the short interest, they're saying they return shares. Guys, the short is just not making any sense. They're saying shares on loan are down to 102 million. That number was just 240 million when the short interest was only 11%. Now they're saying the short interest is 15% and the shares on loan are only just over 100 million. So what could that mean, guys? It could mean that the shorts are not just short, they're short long, which is basically hedging. Um, I think even longs are hedging their position into earnings. Shorts are definitely hedging their position into earnings and even before earnings. I guess, if you're short the stock, guys, and the short has only increased, of course, during this run. Went from that 11 area now over 15. It's been over 15 for quite a few days now. Cost to borrow, we've seen some days spike to as high as 14, 9. Today was not that high. They were ostensibly returning shares, but I still think the stock was being shorted. I don't think retail's dumping here. I think they definitely retail wants to find out what's going to happen next week, wants to sort of, you know, take the temperature of the market, at least Monday and Tuesday. I think you probably will be able to sell higher next Wednesday than you can today because this happens every single week, guys. Looking at the weekly chart, guys. This is what I told you was going to happen at the beginning of the week. It's what I told you was going to happen at the beginning of last week. It's what I've been telling you every week forever. Um, they pump the stock, guys, early in the week. Stock comes out of the gate here. Where is it? Like $9.15. So they pump it on Monday. These options, the short-term call options are going up in value. Tuesday, the stock is basically flat. Wednesday, huge pump, guys. These pumps are where they're basically getting out of those short-term call options and then dumping them on retail investors who are buying them too high on FOMO. So the market makers have gone from down here like in the 920s, 9 teens, 930s, opening those options contracts. And then they dump them on retail here at 980, 990, $10. So they're making great profit on those options, guys. Some of those options were up like 80%, 60% just on Wednesday. So they dump that stuff here onto retail and then of course just destroyed the stock coming out of the gate Thursday. Went from $10 all the way to like 9.45 on that mountain and hump pattern that we see almost every day. And of course, right back down on Thursday and then even more on Friday, and just absolutely murdering those tons and tons of call options. End of the week, there were still 17,000 options at 9.50, 17,000 more at $10, and those were essentially worthless. They're not essentially, they were worthless because who wants to buy an call option from that's expired that wasn't even worth anything in the first place? Is like, I'm just not going to give you anything for that. What if I would feel better, hearing about my losses from like an Australian trapper, like, oh, well, I've seen the Nazi, ruthless. I was out on a lake in the outback. Nazi took my hand. It's like, in any case, guys, I don't know where I'm going with that. It's kind of idiotic. Let the SHARTmaster just break this thing down for you guys. People talk a lot about levels on YouTube. They don't often make a lot of sense because they don't know what they're talking about. They just sort of trace out these pre-made trading patterns and, if whatever you want to call it, guys. They just don't have, I don't think, the experience. Like, I'm not going to listen to like an 18-year-old kid who can't grow facial hair tell me what a chart's going to do because they haven't seen enough charts. Like, I've been living through these nightmares for decades, guys. That's why I don't get scared. That's why I don't panic. That's why I tend to buy low and sell very, very high, if ever. Because I'm able to pick quality and I'm able to understand what these charts are doing. Guys, over the little bit longer term, I think we're definitely in an uptrend. I mean, if you look at this, guys, middle of May, we're down at $4.50. Beginning of June, we're a little bit over $5. I mean, come on, guys. What do you want? You're up like 90, 80, 85% this month. Or excuse me, in the last 2 months, so the last 50 days. um, the pattern here looks extremely, extremely solid. I'm not saying this necessarily means that we have a double bottom here, that we've retested twice and we're going to go back up. In fact, that's my prediction. But these candles are not bullish. They're not extremely bearish, but they're not extremely bullish. So um, this level, guys, at $9.41 is actually critical. Um, the chart has touched these in a meaningful way. If you look at levels, why are they important? Is the more recent gravity, is the price action above or below? Here we see, beginning of the month, all the gravity was below this $9.41 level. It actually almost touched that level on June 30th, came up, touched it again on July 12th, came up, went slightly past it, basically touched it again on July the 14th. And then what happens? Guys, make a new low, test 9 again on the 17th, and then boom, push right through that $9.41 level, top out here somewhere 970. We come back, we hit support once, guys. Trade sideways, come up, test 10 twice, rejected, sideways, test 10 again, rejected, all the way back down, guys. Find support again, sideways. Huge dump below our level, but it goes down twice, tests there, quickly recovers, and then this is key right here, guys. This is key right here. You retest our level just after it breaks down, and it holds. Okay, so that's 3 holds, 1 miss, basically. And then that exact level was resistance there. So the gravity is still around that level and still clearly above. Come back again, test that level, and we see just several green candles here on this 5-minute chart. 4 green candles coming off of 941 to close at $9.43, guys. This is a meaningful level. This is a meaningful level. Resistance 3 times in a row and then support 4 times in a row. Now the key is excuse me, I have misclicked. The key is, what are we going to do from here? I mean, just because we see this double bottom and the stock moving higher, just because that's my prediction, certainly doesn't mean that's what's going to happen. The stock could just as easily, I mean, we see this sideways movement, the stock could just as easily break down. All depends on the ER. It all depends what the market makers want to do. But I believe there's no question the stock is going to move up early next week, absent some horrible earnings, some horrible economic data. Um, just based on the SoFi stock, just based on this chart, the stock is going to move up above $10 coming into earnings. I just think retail is just too hot on the stock. This chart is not telling me, this chart is not saying to me, rally over, guys. This double bottom looks really good to me. Both times it just absolutely exploded. It didn't, want to consolidate down there around 8. There were absolutely no sellers of the stock. There were only borrowers. And, that was clear all the way up to $9 on this first run of the W, this first run of the double bottom. And on the second run, all the way back up over 10 twice, came down and checked again at 941. Guys, I believe this chart screams that it's going to go back up more ahead of earnings. That's what I say. I'm the SHARTmaster. I don't know all the terminology, but I've seen a lot of charts. I've eat, breathed, and sleep this SoFi chart since it was IPOE. I'm very familiar with what this company tends to do on earnings. I know Anthony Noto is not big on surprises, guys. He seems to hate surprise parties. He likes to be predictable with his beats. He likes to keep the chart looking very neat and orderly. Remember, he is a military man. Went to the military academy, top of his class as an engineer, I believe trained as an Army Ranger, if I'm not mistaken. But has that great hair, always looks good in a windbreaker. Loves me some Anthony Noto as our CEO, and frankly, the rest of our executive and management team have just been knocking it out of the park under the most arduous of conditions. But guys, this chart tells me the stock's moving up. Um, that's what I'm seeing. I'm not seeing, any insane volumes. I'm just seeing a stock that is heavily, heavily shorted. And if the earnings is a triple beat by significant margins, if by some miracle, we break even or maybe even have a 1 cent loss, I believe the shorts are going to be in big, big trouble, and it's not going to be a extremely dramatic short squeeze like some of the other fintechs or Carvana or things like that, because the short interest isn't that high. But guys, this is what I'm talking about. Like, you basically see the estimated short interest in 3 months has gone up 26%, but the free float on loan has gone down 23%, 23%. Days to cover has gone down 50%. Utilization's gone down 43%. But the short keeps going up, guys. And the estimated short interest value is up over 100%. A lot of that's, of course, because the stock just doubled. But in any case, guys, the short interest does not make sense. They're saying they're returning 2.4 million shares. If they're returning 2.4 million shares and the volume is only 32 million, the stock should not have gone down today. It's just, I guess, the only thing I can think is just it's a lot of profit taking. It's a lot of swing traders just not wanting to deal with the extreme volatility that we're going to experience next week. Guys, Seeking Alpha is they're pretty fair to the stock. I really like Seeking Alpha. They have a balance, between buying and selling. They have pretty good balance amongst their articles. This is one that came in just SoFi's a sell before earnings. Basically, this is SL Investments. I'm not really familiar with this guy or woman. But anyway, he's saying he took profits on his position. He's saying the changing credit conditions are going to be more challenging. Unemployment. He's talking about how Capital One is seeing greater defaults. JP Morgan saw just a slight uptick to delinquency rates return to pre-pandemic levels. That's not alarming. The normalization of delinquencies weakening over quarters. CBOs expecting unemployment rate to increase to 5.1% by end of 2023, currently 3.6%. So he's basically saying that SoFi's growth relies on personal loans, which are like credit cards. They're unsecured, they're risky. Further headwinds, expecting 2 more rate hikes. The Fed could be bluffing, but he doesn't think so. Core inflation rate rose by 4.8% year over year, despite constant decelerating inflation rates as the rate of moderation continues to be slow. The inflation has been decelerating for almost a year, yet the core inflation rate is still more than double that of the Federal Reserve's target of 2%. Further rate hikes could pose an additional risk to SoFi, weaken consumers, but also put more pressure on consumers while diminishing potential demand for loans. Therefore, for the macro, basically saying macroeconomic conditions are a big headwind for SoFi. Valuation, biggest headwinds, company's valuation multiples, expecting minus 18 cents per share in 2023. I think that's going to be closer to 15 cents. 16, even as the company reaches profitability during the final months of the year, then an analyst estimates massive earnings growth throughout 2024 and 2025. Valuation multiples too expensive. P ratio 261 2024 with 48 in 2025. Guys, that just tells the story. Okay, if it's even, I think his estimates are off. I think they're too bearish, but even if it's 261 in 2024 and then that cuts to 48 in 2025, guys, think about it. What's it going to be in 2026? And he says at the current valuation level, the company will need to have flawless execution with a continued 50% yearly growth rate to be attractive. That's asinine. A clown. Risk to thesis. The biggest risk to my bear. They don't need 50% growth. No company in this size is going to be able to grow 50% continuously year over year indefinitely. I mean, not for the next 5 years. It's absurd. Other analysts are saying their growth rate should be, in the high teens. SoFi is telling you I think it could be, 25-30% easily for the next 5 years, if not even better than that. The biggest risk to my bearish thesis is SoFi's main driver is personal loans. Personal loans have far more favorable interest rates than credit card. That could actually lead to an increase in demand for personal loans. And here's the kicker. Further, SoFi has high quality borrowers, according to the company's management team. SoFi borrowers' weighted average income is $164,000 with a weighted FICO score of 747. 747 coming out of the sky. Oh, won't you take me down to Memphis on a midnight ride? I want to move. Playing in a traveling band. Okay, that's a good song. In any case, that doesn't really help us here. Like a big and tall credit card in planes, trains, and automobiles. The strong and reliable customer base is likely to create insulation for SoFi in times of mild economic slowdown. And that's the key, guys. They compared us to Capital One. They compared us to JP Morgan. I don't think Capital One's borrowers are averaging 164,000 and 750 FICO. I bet it's not even close to that. And that's why they're experiencing higher defaults and SoFi isn't. SoFi faces headwinds. Delinquency rates are expected to rise pre-pandemic levels, more pressure on the bottom line, higher potentially delinquency rates. SoFi will be more stringent on new loans. SoFi is already extremely stringent on their new loans. Further, due to massive rise in SoFi stock price, valuation is too expensive today. Therefore, I believe SoFi is a sell. Okay, I mean, I'm not going to. At least the guy comes with some logical arguments. I disagree with him. I'm not going to sell the stock at this price. I think it's stupid. If you look at his actual own numbers, which I think are too pessimistic, he's saying, they're going to make money next year, but it's going to be a small profit. The P ratio will be 261, but the year after that, the P ratio will be 48. I mean, follow the logic, buddy. Don't stop there. Like, what'll the P ratio be in 26, 27? I mean, doesn't have to be 50% growth. What if growth is 25%? I mean, look at the growth in EBITDA. Those same types of growth is going to come to net profit. It just has to translate to the graph. Like, I don't understand what these freaking idiots are talking about. How do these people get jobs? How do they operate computers? How do they dress themselves? God, what's wrong with these fucking morons? In any case, guys, I've gone on way too long. It's a Friday. I just want to show you guys there's nothing to be afraid of. 941's a key level. All the gravity's above it. Nobody wanted to buy the stock above 941 until July 17th. And then since then, nobody's wanted to sell the stock all week below $9.41. Found support once, twice, 3 times, 4 times, and I believe that support will hold on Monday and the stock will make a strong move Monday. Guys, what do you think is going to happen on Monday? What do you think is going to happen going into earnings? What do you think is going to happen with the earnings report? What the hell do you think is going to happen about anything? You know, will will Schnooky and what I don't know. Just give me your thoughts down in the comments. Comment. Um, the SoFi stock, guys, has been absolutely predictable this week yet again. The options, the volume, it's all been going according to script. RSI, at least on this 5-day chart, is all the way down to 44. So the stock is definitely not overbought or oversold. I think we're primed to make a very strong move up Monday, Tuesday, Wednesday. We just have to see, do the shorts have the minerals to really dig in and kill what will probably be a huge volume of short-term call options? God, retail, stop buying those late in the week. You're getting crushed. You're getting a double nut shot every single week, and you just say, "Thank you, sir. May I have another?" Well, you certainly may. We'll be happy to dump these shitty options on you again next Wednesday and take all your money and take all the profit, take all the premium, slap you across the face, kick you in the nuts, say, "Who's your mom?" and send you on home with just enough for cab fare. Guys, my name's Danny Deals. It's July 21st, 2023. It's 4:37 p.m. We've got just a 20 or so minutes left in the aftermarket. Let's see what this SoFi stack turd did on the day. Still sitting down 1 cent, guys, so 942. Remember, I said the key level's 941. I can amend that to 942, but the point is, guys, all the gravity's above that line. As long as that holds, this stock's going to move up above $10 coming into earnings at least by Tuesday. That's my opinion. A nickel's worth of free advice. Take it for what you will. Certainly don't listen to it and trade on it. Always do your own research, guys. I don't know anything. I'm just an average Joe, just a hammer swinger. I just learned to read last week. I don't know that much about technical analysis. I know a lot more about fundamental analysis, but I do think I have a pretty good handle on the SoFi chart, and I think that 941 is going to hold, and I think we're going to move back up through $10. Let me know what you think is going to happen down in the charts, guys. Hope you guys have a great Friday, a great weekend. Try not to stress out too much about your stocks. It does no good whatsoever. Guys, we will check back in with you again on Monday. We have earnings coming up again next Monday in 1 week. Pre-market, going to be a very, very exciting week if you are an investor in the SoFi stock. Thanks for watching. I really appreciate it. My name's Danny Deals. I'll talk at you again real soon. Have a great night.